So it's tough right now for operators with investments that use floating rate debt, such as value add or construction deals and multifamily or even other asset classes. Now, if you've invested in one of these deals as a passive investor, or maybe you know someone who has, they're facing possible losses or even capital calls. Now, what if the operator asks you for money to invest in a deal you already invested in? Should you participate? Well, in this video, I'm going to break it down. I'm going to talk to you all about capital calls, what they are, and when it makes sense to participate and maybe to pass on the capital call. Hey, I'm Michael Blanc, and I help people become financially free through real estate. So here's a scenario. You invested in a syndication for passive income, and then some months or years later, you get a phone call or email inviting you to a capital call, right? So what is a capital call? Number one, it's the operator's asking you for more capital, but why? Well, maybe they're running low on money or they're running out of money. Maybe it's simply through bad operations or through rising interest rates. We had a huge run up in interest rates, or it's because thing called an expiring rate cap that requires capital. So, what should you do about that? Like, how should you feel about that? And then should you participate? And that's what we're going to talk about here in the next few minutes here. Now, we had to do a capital call, or first that we had to do. And so in this particular situation, the property actually was performing. It was over 9% occupied. And we did have a variable rate loan on it because it was a value add deal. Now, the reason we had that on there was because for value add deal that are occupied, that are under less than 90% occupied, you have to get what's called a bridge loan. And they almost always have floating rate debt. But the way that 3 years ago, the way protected against a rise in interest rates was to buy an interest rate cap. It's almost like insurance. At the time for, $25 million deal, we paid, $40,000 for this. And it was a nuisance, but it was insurance policy in case they went up. Okay. So that's why we had to do a capital call, because that floating rate was expiring and had to be extended. But it wasn't extended at $20,000 or $40,000. No, it cost $1 million to extend this interest rate cap. So imagine you buy a house for your family and you buy insurance, every single year, your premiums, whatever it is, $8,000 a year. And then next year you get a notice from the insurance company that says, hey, you know what? That same $8,000 insurance policy is now $80,000. And you're like, what is this? This makes no sense, right? And so this is what we're faced with in some of these situations right now for these construction loans that are coming due. Now, the question is, does it always make sense to participate in this? Now, we had an 80% participation, and the question is, does it make sense? So, and we're going to answer that. Now, my number one priority is preserving investor capital, right? But not at all costs, especially when it doesn't make sense. So let's talk through several scenarios. So scenario number one, and this was the case for our particular deal, is there's a clear plan to get your principal back. If you have a clear plan of getting your principal back and you have to put money into a deal to do it, you might want to do it. But what if there's not a clear plan, right? So let's say the operator is calling you up and say, hey, I need another $20,000, $30,000, and they don't have a clear plan to get you that money back, right? So you're like, now there's no cleared exit plan. I may not want to participate in that capital call. Here's another situation. What if there's no chance to recover your principal at all? So what if, for example, the valuation of the property that you're being asked to fund, that you already funded, is now below the price of the property? Now think about what would have to happen for you to get your principal back out in that case. Remember, the bank is in first position. They're getting the money back first, but the value is now below the loan balance. So if the bank's going to get a haircut, what's going to happen to your money? And let's say you invested $50,000 and now you put another 10 in, you're going to lose the 10,000 also, right? So it doesn't make any sense for you to put more money after bad. And so as much as I'd love to defend capital calls and preservation of capital, sometimes you may just simply have to walk it from the deal. So not all capital calls are created equal. We'll be very clear on the probability of you getting your principal back. Now, if there's a good chance you can recover part or all your principal because the operator has a clear and achievable plan, then it may make sense. On the other hand, if the operator does not have a clear plan, or the property is too far underwater, then don't throw good money after bad. And so it's a situation where, look, investing is very profitable. It's also risky. In that case, you may have to simply take the loss and move on. So it's important for 2024, though, to sharpen your pencil, because we're starting to see a lot of good buying opportunities from off-market distressed asset sales like I'm talking about right now. We're seeing stuff trade at below the loan value. That's going to require short sales, loan modifications. So be ready for that. Understand that the opportunities we're seeing now are vastly different than they were 2 years ago. They're not using floating rate debt. The interest rates are highest they've been in over 15 years, right? So make sure that you understand the differences of the opportunities we're seeing now versus the stuff you may have invested in 2 years ago. Now, if you have any more questions about capital calls or passive investing in general, or just want any kind of update on investments in real estate, then let's hop on a call and let's have a chat. It's important that you stay informed and ready for what 2024 has in store. Connect with us at nighthawkequity.com/call. You can book a call with us. We'd love to have a conversation around some upcoming opportunities in the real estate space. Catch you next time.